Well, let's turn our attention away from the equity market to the commodities market. Manisha Gupta is joining in to tell us what's going on there. Manisha, morning.
Thank you for that, Nigel. Well, I'm looking at the precious metal prices because this is one area that started the day on a positive note but doesn't seem to be holding right now because the dollar index seems to be rebounding. We are trading in the positive for dollar index, and many of the commodities and other tangible asset classes also are under pressure because of the kind of week this is with so much data coming in. But as you can see, the gold prices after hitting 1960 in the earlier Asian trade have continued to see a decline. We did see prices post a second weekly gain and the best weekly gain in 1.5 months. Silver as well is now trading at around 2-month highs. We saw silver as well post the best weekly gain in 2.5 months, but the markets seem to be slipping off at this point in time. The support clearly comes in from the fact that we have seen weak US job claims data. The number that we've seen come in from China also has been on the weaker side. And then the kind of, stress, tension, escalation between Russia and Ukraine also were supportive factors for gold and silver prices. Until time in this year, we've seen a range of $2,051 to $1,810 an ounce on the lower side. We seem to be trading somewhere in the middle at 1960 on your screens there. There also is 1939 to 1990 of a range that the gold prices have seen in past 1 month. So a break on the lower side or on the higher side is what the street is anticipating by the time we end this week after all the monetary policy meetings are done with. If you look at the global markets now, it is about 72% chance of a Fed pause in the month of June, but there also is a 67% probability that you might be looking at a 25 basis point rate hike for the month of July, and that's exactly what the street is working with. The global ETF markets have been giving some support as well. For last many months now, we've seen constant inflows there. For the month of May, $1.7 billion of gold ETFs were bought, and this was a third straight month of gains or inflows coming into the market. Within Asia as well, it has been about China and India, which have seen net buying when it comes to ETFs. The China also has seen gold reserves gain up by 7 straight months to nearly 67.27 million ounces. This is one country that hasn't seen any redemptions at all. Russia is another one, Uzbekistan as well, which have seen gold reserves continuously seen in sense of buying. Prices below 1960 is where we are looking at ahead of the key central bank meetings there. So you have the US Fed meeting, which is on 13th and 14th. 13th is also the US inflation data that comes in. European Central Bank meeting is on 15th of June, and then you have Bank of Japan on 16th of June. So starting from 13th, it's a constant deluge of data that would be coming in. This is what the markets are anticipating in sense of gold prices going forward. Citi looks at 1965 of an average. That is exactly where we are trading at. Metal Focus believes that 1890 on the lower side could be an average, especially with the fact that the July also could see a rate hike there. But then you have more bullish cues coming in. You are looking at 2000 to 2050 as an expectation from Commerce Bank. And the latest Bank of America report says that 2100 is what they're anticipating by the third quarter of this year itself. So clearly all over the place when it comes to gold forecast.
All right, Manisha, thanks very much for that. So gold in focus now. Let's